Welcome to Freight Nation, a trucking podcast where we explore the fascinating world of trucking and freight management. We dive deep into the freight industry and uncover why the trucking industry is more crucial to our country now than ever before. Stay tuned to uncover the driving forces behind successful trucking businesses and hear from the hard-working truckers and leaders who keep the world moving. Let's hit the road. All right, well, welcome back to Freight Nation, a podcast by Truckstop.com. Man, am I glad you joined us today, everybody out there in Freight Nation. Whether you're able to watch and listen or just listen, we appreciate you giving us your time today. Today's going to be a really fun episode because hopefully today is a day you get to learn something about our marketplace and its effect and impact on the U.S. economy and the global economy through one of the industry's leading experts and my good friend. We're joined today by Lee Klaskow, who is the sector head and senior analyst for freight transportation logistics for Bloomberg Intelligence. And for those of you that don't know Bloomberg, boy, you're going to get to know it today. It's an industry-leading communication platform for all the financial marketplaces globally. They are the leader and the player in the world for this. And I'm lucky enough to be friends with the main man who leads their transportation and logistics sector. I got to meet him back when I started at Truckstop back in 2013. I was very lucky to become friends with him, and we've remained friends ever since. And we'll talk a little bit about our relationship with the two companies. But Lee, thank you so much for joining us today, and I appreciate you giving us your time.
My pleasure. Glad to be here. And hello, Freight Nation or Mr. Nation, however it.
Mr. or Miss Nation. There's kind of both. We get kind of both sides. As they said in Blues Brothers, they get both sides, country and Western music. So got to get a good Blues Brothers reference in there. Well, Lee, thank you. I really appreciate it. The relationship between Truckstop and Bloomberg is one that we've had it for 15 years plus, and so we've been really very fortunate to be associated with you guys. But there may be some on the call that we move freight, we move stuff across the country on trucks, and there may be some on the call that don't really know who Bloomberg is, really from a market standpoint or a communication standpoint. And if you wouldn't mind, before we jump into Truckstop's relationship and how you got to freight and what are some of the cool things about the market and things that are going on from a high level advice standpoint, tell a little bit about Bloomberg so the watchers and the listeners would know more about you.
Sure. So Bloomberg's it's a huge organization. It has a number of businesses, but its main business is a terminal business. It's like a trading and information platform that most decision makers that are involved in the financial markets in one way or another kind of have at their desks. So if you ever watch a movie about Wall Street, usually the trading platforms, the screens that are flashing green and red are usually a Bloomberg platform. And what it brings together is data, information, and analytics to our customers, and we have roughly around 330,000 customers around the globe. And again, these are decision makers. They can be, anyone from a hedge fund, someone that working at a hedge fund, a pension fund, someone that works for the a treasury department within a company that works for the CFO. So pretty much it's a broad base type of customers and a geographic base, but it's really we like to think that we help people do their jobs better through the information, data, and analysis that's available on the terminal. Then also we have other businesses as well. A lot of people might be more familiar with Bloomberg TV or Bloomberg Radio or Bloomberg.com or Business Week magazine. These are all things that are kind of fed through what's going on in the terminal and through the news organization that Bloomberg has. And I'm part of a company, I'm part of a division within Bloomberg called Bloomberg Intelligence, and we're their research arm. There are quite a lot of us around the globe. There's roughly, I think we have about 450 professionals around the world. We cover over 2,000 companies. We don't do buy, hold, sell recommendations like a typical sell side analyst, but we do bring people through the investment cycle and kind of hand the baton off to them, and they make up their own decision. And we cover companies, industries from an equity standpoint, a credit standpoint, an ESG standpoint, regulatory, litigation. So it's pretty much one-stop shopping for anything you need to know when trying to make an investment decision. And again, that can be if you're looking to invest in stocks, bonds, hard assets, commodities, anything.
Wow. Did you say over 330,000 terminals where people have access to the Bloomberg data?
Yeah, subscribers. I think that's the last number that I've seen.
Oh.
Um, it's around the globe as well.
So when did Bloomberg start as a company? What year did it get established? And
Oh, now I'm going to get in trouble.
Oh, roughly.
40, 50 years, something like that. Obviously, I'd have to Google that. I should know that, but I don't.
Sorry to catch you off guard. Well, long enough to be the global leader for financial market information, without a doubt. And I've been to Bloomberg's offices in New York City when I got to visit Lee and the team there. And not only do they have a really cool data company, they got a really cool building itself. It's just very unique in how they have even architected this building where people are constantly around each other, and it's very unique about how they approach things. And so Bloomberg is a staple within the financial markets. And when I mean financial markets, I mean the money markets, where people are investing money and doing things to try to grow businesses and grow their own personal financial places in the market. So it's really cool. Bloomberg's a great company. We're Truckstop's proud to be partnered with Bloomberg on our data end. But Lee, the thing that I love to talk about, I love to always kick it off, is that trucking and transportation is so big. Most people, they until maybe the pandemic, there's many U.S. consumers that really, I mean, they kind of know it if you just kind of sit and think about it for a second, but they don't ever think about it day to day on how big the transportation industry is and what an impact it has, not just in our lives, but how it affects the U.S. economy, or it's a reflection of the U.S. economy. So many people have come to transportation from somewhere else. And so I love for the Freight Nation listeners and watchers to hear your story on, like, how did Lee Klaskow get from where he was to being inside of transportation? You've been inside transportation almost 14 years now. And so, it's not like you just jumped in and you've been here a couple of years and you're looking to see what's next. You've been around and you've become a real trusted staple, speaking at the ATA, speaking to CSCMP, speaking at all these industry leading associations and events where they trust your data and they trust your feedback. But how did
And
Lee?
speaking to Freight Nation as well.
Well, hey, and the Freight Nation listeners on Truckstop, we're the top of the pyramid, no doubt. So, how did this happen for you? How did you end up in transportation, and then why do you stick around?
Yeah, I think for a lot of people that aren't born into it, a lot of people kind of step into it, if you will. I had a lot of jobs on Wall Street, in banking, even worked for a real short stint on the floor of the New York Stock Exchange. And I was looking to do something different, and I got into research. And, the first research job that I got, I was working actually covering property casualty insurance. It's just as exciting as it sounds. And then my boss left, and he left me. And so I had to find a new home, and I found a home in an industrials team. And I worked for a great analyst there, Prudential. And, about after working with him for about a year, he was like, you ready to get promoted? Why don't you cover transports? And I was like, I kind of want to be a casino analyst. I don't want to cover transports. But, his rationale was the fact that, our customers are mutual funds, hedge funds, and the people that would buy an industrial stock like a GE or a Honeywell are the same people that would buy a railroad stock like CSX or a trucking stock like Warner. So, like, I knew the customers already, and I would hit the ground running. And, it was a smart idea. It was his idea, not mine. And that's kind of how I kind of stepped into it, if you will. And I did it on Wall Street as a sell side analyst for about 5 years before coming to Bloomberg 14 years ago. So I've been covering freight transportation and logistics as an analyst, at least as a senior analyst, for close to 19 years now. And my operational chops, if you will, a couple summers I worked for a now defunct LTL company called APA in New Jersey. I was a scab worker. It was a unionized facility, and they would like hire college kids to work the night shift. And that was the year when I first started doing that. That like the next semester I went back to college, I got started getting straight A's from let's call it a C minus average, because it was hard work, and I was like, I'm not made for this. It's unloading trailers at in 100-degree weather at 2 o'clock in the morning was a tough job, and it paid very well. Yeah, it was great for beer money. But that's kind of how that was kind of my journey into covering transports, and it's been fantastic. I'm really happy that I listened to his name was Nick Heyman. I'll give him props from Prudential. I'm really glad that I listened to him. He was a great mentor, and he helped me develop into the analyst I am today. So I have to, I owe them a lot.
No doubt. There's always somebody, one or two people in your life that really motivates you, that kind of get you, let you help, no, get you to see the bigger picture. Really interesting that you were working, loading and unloading LTL trucks and kind of a miserable weather. For me, it was a landscaping job that I realized this is not what I want to do. Nothing against landscaping jobs, nothing against working for a truck. It's just not where the direction that I wanted to go. And so, but it's cool that you had some experience inside of knowing inside a little bit inside the trucking marketplace. Mine was using a fork truck and loading trucks and taking inventory on my dad's dock, where we had a small steel processing company. I was around truck driver since I've been around about 12 years old. So always thought that was super unique and neat. I mean, as a kid, who didn't love a big truck, and that's always cool. But so, hey, quick question: you said you were actually on the floor for a while of the stock exchange. So tell, is it exactly as the movies paint the picture, or is that real, or what's the reality about being on the floor?
Yeah, I mean, listen, there's a lot of energy. It is exciting. It was fun, but it was also during a time where you just kind of saw the writing on the wall, where technology was taking over a lot of these positions. So, like, if I started that 40 years earlier, maybe I would have had my whole career there, because it was fun and it paid well and it was interesting. And at the end of the day, at 5 o'clock, you're done. There's you go out and maybe entertain some clients, and then that's about it. Um, so yeah, it was a very short stint while I was there, and it kind of motivated me to try to find something that I thought that, because of technology, would provide a career path for me that was longer in nature, which it ended up to be. And also, you were talking about, like, transportation type jobs. I also spent a summer delivering lobsters. I learned how to drive stick with a box truck, on the hills of West New York, which, if you're not familiar with it, it's like right by the George Washington Bridge, and the hills are crazy. Um, I'm pretty sure I burned a couple clutches in that job, but so I have that, truck driver delivery guy. I can put on my resume as well. Those are my operational chops.
I get it. I get it. So
I'm
so
sure a
you
lot of I'm
delivered
sure I'm
lobster.
sure a lot of your listeners are rolling their eyes right now. Um, I
I'm
can't
sure
wait
they're
for the
like,
hate mail.
yeah, giving it the old proverbial, yeah, sure. I get it. No, it's all, I think there's so many young adults, the idea of sort of the lore and the just driving a truck's just a cool thing, I mean, no doubt. I have driven a truck and I know I saw a little bit what it feels like to feel like that you're the king of the road, because in a class 8 truck going down the highway, you are the king of the road. There's no doubt, man, because of just what you see and the power that's into that. All right, so let's shift a little bit. So, around 15 years ago, we got this inquiry from Truckstop. Did got this inquiry from this group called Bloomberg that you'd like to look into some truck data. So, when all that started, what motivated Bloomberg to reach out to the market and want to get the freight data information that? And I know we're not your only resource. You guys have lots of resources for the data, but you reached out to the spot market and wanted to get some data on that. Why was that relevant to Bloomberg? And then what motivated you to kind of reach out to Truckstop?
Was driving my car to work, and at the time, I was listening to I listen to Road Dog Trucking every once in a while, and I think someone, I don't remember who it was talking about the MDI report. This is really, really interesting. And at the time, I might have been at Bloomberg Intelligence for a couple of years. And, one of our initial mandates were not only to create this research division, but, like, put all the industry data that someone that's doing their own research would want on the terminal as it relates to various, whatever industry you cover. Because, they were great with financial data, SEC filings, and all that sort of information, but they didn't know exactly, what someone who covers trucking would want to see, or what someone that covers the rail industry would want to see. And so the first couple of years, we brought a lot of data sources onto the terminal. And so when I heard the MDI on Road Dog Trucking, it really piqued my interest, and I just I think I just reached out to your company, and you and I ended up getting in touch with one another, and kind of went from there. And we also not only we're able to onboard that data onto the Bloomberg terminal that's available to our clients, but we also Has a great partnership where we do a number of surveys throughout the year on the trucking, on the brokerage industry. And the reason why, trucking transportation data is so important, not only just someone who covers, JB Hunt or Schneider or Werner, or even the rail industry who wants to look at like pricing. Why it's important is it's really the canary in the coal mine for the economy, and that's one of the things that I probably love most about covering transportation. Not to pat my own back, but like I know a lot because I'm not just looking at an industry. The industry's end market is everyone else's industry. So it kind of almost makes you like I'm not going to say an economist, but like it really gives you like a macro view of the US economy, the North America economy, and then, we also look at the global economy. And I need to know these things because they all, it's kind of like a flywheel. The freight data shows you what the economy data is going to do, but then the economy data is kind of like telling you what maybe the freight data is going to do. And so it's like a constant loop that you really need to be plugged into. And what the trucking spot data did for me, in addition to getting a better understanding of the companies that participate in the spot market, it is obviously it's a leading indicator of where contract rates are going to go. Most of the publicly traded trucking companies, they play predominantly in the contract market. So if the spot markets it starts inflecting negatively, that can mean bad things for contract rates. If they inflect positively, it could be a good sign for contract rates. It's a good bellwether in terms of where brokerage margins are going to be. So the main reason why we onboard it, but my smarter colleagues use it in their own research. If you're covering call it the grocery industry, you can look at reefer rates and get a good understanding about supply demand dynamics or things you can take away from that. Or if you cover the truck OEMs, the manufacturers of the trucks, knowing the health of the trucking market will really help you kind of understand where demand's heading. So there's a lot of implications and use cases for spot data outside of just like what's used, why it's used in the industry, obviously, to say, hey, should I take a load or not? Is it worth my time, and am I going to get an ROI on this? So yeah, it has broad implications for me as a transportation analyst, and also to some of my colleagues that cover different segments.
Yeah, no doubt. One of the things, and that, thank you for explaining that, and glad that data is of value to you. One of the things that, as a data, a little bit of a data nerd like you are, as well. And yeah, I did call you a data nerd, so I think it's appropriate for both of us. So is that in the modern world, ever since the advent of the internet, or as my dad used to say, the internets, data is more available. And if you're managing anything and you're not looking at the available data within the market segment that you're in, you're behind the timing of being able to do something in the market that's the most beneficial to you. So I just think about the spot market data and looking at the overall truck data is good, but it does have a little bit of a lag to it. It's delayed by a certain time period. Sometimes 30 days, sometimes 60 days, sometimes 90 days, because it is a $1 trillion industry. So it's really big and it's got hundreds of thousands of players in it. And so it's hard to get that data. But with the spot market data being aggregated into a network like Truckstops, you're able to get a complete view of a segment of the market. And the data is only 7 days old. How unique is like 7 day old, complete like segment of a market data to a big data processor and data analyzer like Bloomberg? How impactful is that?
Yeah, well, so timeliness is always a good thing. So we have. I'm not going to name names, but we have the other data sources as it relates to transportation on the contract and spot market. One of our contract providers provides us monthly data that's a 3-week lag. So that data is not.
That's still pretty fresh. Yeah.
Yeah, but it's monthly and it's 3-week lag. So like we'll get January data on February 21st. Um, and that's fine, like when you're looking at big kind of picture stuff. But if you're kind of trying to figure out what's going in the quarter, the weekly data is much better. And we also have a provider that provides us contract data by the week. So the truck stop data, it provides us very timely insights. Weekly data is extremely important because it's all about timing. And if you guys could provide us like with daily data or hourly data, there would be somebody that would trade on it. So, everyone looks for an edge, if you will, when they're making their investments. It's not just trying to know everything, it's also having data that, other people might not have readily available, or taking that data and trying to do some sort of regression or correlation where you can figure out other things. So the more timely, the better. And in industry, when it comes to industry data, usually weekly is the best that we can do. And so that's, we write about the truck stop MDI and the truck stop spot rates every week. It's part of like my, what I consider maintenance research, where it's, to keep your thumb on what's going on in terms of the pulse of the overall industry. It's really important to continue to write upon that, because listen, we have a thesis about, when we think the market's going to turn, like, on the again, we're looking more at contract rates because of the companies that we cover play predominantly in the contract rates, but we're using the spot market to see if our thesis on contract rates are off kiltered or need to be adjusted. And currently our thesis is that, we expect contract rates to start to improve late in the first half, and then growth to accelerate into to the end of the year, which could yield low to mid-single digit rate increases. That's probably going to be some of the more optimistic outlooks out there. But I tend to be a glass half full kind of guy.
Well, that's one of the things I admire and appreciate about you. I don't think I think your and Bloomberg's estimations on this are some of the more broadly held optimism for the marketplace. And I think the reason, the justification behind that, what we see at Truckstop, and I'm sure you may see this in the data as well, is that when you think about the buildup curve during the pandemic, it was obviously a lot longer than the standard curve. Most of those things are anywhere between 9 and 18 months, and this one was, you know, tremendously longer, a couple of years, 24, 28 months. So it wouldn't surprise me if you look at the data that you see the same thing, beginning to build back middle of the year, and that would those curves would sort of agree with each other, and that's something you pay attention to. So for Freight Nation people out there, the point of this is that you want to look at, if waves go up at a certain height, they come down at a certain height. So you always look at the wave and how long it lasted as the impact on when things are going to recover, or when they might be going back down into some, true normality, or even potentially a market depression. So super important to watch. All right, so one of the great things about Bloomberg is you guys have a global. The United States is the largest transportation market on the planet. It's a tremendous. I think last time I asked the question, it was a little over 40% of all the total freight movements, are in the contiguous United States. So we are a major player. However, the world's a flat place, Lee. After the advent of the internet, everybody can communicate as quickly as a second, with each other. And so you get to see something that most don't, which is you get to see the domestic, or the sort of the North American marketplace, the United States marketplace, but you get to see that in the globe from a global standpoint. So as I look to global markets, you've seen a lot of things change. Give us Bloomberg's take on what's the status of the current transportation logistics marketplaces, and then how much have they recovered, and then kind of what's the overall thought on where they're going to go.
Right. So in addition to covering trucking and railroads and logistics companies, I cover marine shipping for Bloomberg Intelligence. I do it along with a colleague, Kenneth Lowe, in our Singapore office. I was just out in Asia 2 weeks ago. We did a three-country tour where we talked to our clients and to people that are involved in the shipping industry. Obviously, you really can't, listen to the radio or read a newspaper without hearing about the Red Sea and supply chain concerns again. And so that's the biggest change, because going into 2024, we were expecting, extreme doom and gloom for the container liner market, with a lot of liners losing money. And now, because of the run up in rates, rates are up 300% depending on the lane. Expectations are that, maybe a lot of these liners might not lose money this year. And a lot of that, again, is being driven by these higher rates as capacity is being sucked out of the market as ships avoid the Red Sea and the Suez Canal and go along the Cape of Good Hope, which is the southern tip of Africa, to Europe and to the east coast of the United States. And that can add, anywhere between 10 and 12 additional days. And so that's just taking up a lot of capacity. And you have that. Plus, you have the issues in the Panama Canal, which is, low water levels. Then you have, the still effect from the impact of the Russia war with Ukraine. You have a seaborne supply chain that is strained. It's not like we're, during the heights of pandemic, that not that kind of a dislocation, but it is, messing things up. And so then, shippers are going to have to think, well, do I want something on the water for 10 or 12 more days? Is it going to get to where it needs to go? And we haven't even had the increase in congestion at the ports yet from these changes in voyages, and that's going to happen. And again, it's not going to be like during the pandemic where there were 102 ships outside of Southern California waiting to dock, but you could see some slight increased congestion. Could see some shippers, instead of saying, hey, I don't, instead of going to the East Coast or the Gulf Coast, maybe they're just going to the West Coast. That's good for trucking. That's good for rails, longer lengths of haul for freight that's going across. But we started, I guess, this question with, what are the global markets? So I think the global markets are really in flux. And the reality is it really is going to depend on how long the Red Sea crisis is a crisis. If the Houthis, stop, attacking ships, which we would assume would happen if the Israeli-Hamas conflict comes to a close, things will just go back to normal. Rates will sink, liner rates will sink back because the liner industry was facing supply growth that was expected to outpace demand. It happened last year, it's supposed to happen this year, and it's also expected to happen in 2025. The order books for ships, I mean, these are big ships, they're $100 million ships. So like we all know like what ships are being built when they're being built. So there's a lot of data on that. So you can have a lot of good visibility about, what the supply picture is. Obviously, things do change. Demand can change because of the longer voyage times. They could change because China decides to stimulate its economy. And China is also something that we look at. I mean, that economy is cooling. It's not nearly growing at the pace that a lot of people are expecting it to. It seems to on the cups of a lot of issues with its housing market, which could moderate its economic growth even further. So we look at China a lot because as they import a lot of basic materials. So like stuff going through a dry bulk ship or a tanker ship, and then they make it into stuff, and then we consume the stuff. And so you just really have to look to see what's going on in China. To dovetail on China, one of our like longer term thesis is more and more nearshoring in Mexico, and we're overly bullish on any companies that have exposure to Mexico. And it's not going to be a light switch. It's not going to turn on overnight. It's going to be like watching paint dry or grass grow. I don't know really what the
Whichever
analogy
slope.
would be. Yeah, I mean, right now they're just maybe like the companies are looking at going to Mexico. They're maybe starting to pour concrete. Nothing's really being manufactured, but the automotive supply chain has done a pretty successful job at building their supply chain, connecting Canada, the U.S. and Mexico. And I think of a lot of other industries can learn a lot from what they did, and that would provide a lot of long-term growth for transportation companies domestically. Going back to the Suez issue, that's also having a positive impact on air freight rates. Air freight rates were loosening up and now they're tightening up because shippers are like, well, because of that delay, I'll air freight stuff to Europe and then put them on a boat and then send them to the US, or I'll just send them to the US. It obviously has to be high value goods. They're not going to be doing that for a container of toothpicks or t-shirts.
Yeah, for sure. So, yeah, what a great explanation. So, Freight Nation, I think the thing to take away from this is that everything creates an impact on transportation. Like the cold weather we just had recently in the United States, the rates went up because of the cold weather. Anytime we have a natural disaster, a crisis, or a pandemic or something, it affects everything in a small amount or a large amount. So it's important that you pay attention to this. If you're out there moving freight, that you look at the data that's available, look at what's going on, and if you educate yourself or you inform yourself on it, then you can actually take advantage of the opportunities that are in the market. So let me ask you, Lee. You mentioned China, which is always interesting. I think as an American, we always go, "Oh, we don't want China to be strong. We want China to be weak." Because we want to be strong. So is a stronger China better for the United States than a weaker China?
It's a great question.
That's
I
that's not
think
too political, is it? So,
no, but listen, this is a lot of this is my own opinion. I think that what is happening now should have happened a long time ago. I think, most companies began to rely too heavily on China, and that can truly, impact supply chain. Listen, this is an election year. The former President Trump, he's talking about tariffs already. Tariffs, just because you put a tariff on an import doesn't mean like we're just going to start manufacturing it in Delaware. So it really just becomes an inflationary tax on consumers. It's not necessarily what it's trying to accomplish. A lot of times it doesn't happen. It can protect domestic industries, but if you're doing a broad-based tariff, it's just going to be inflationary and a tax. I think that the closer we're tied to, the less chances are, something bad happens between the two countries. But who knows? That is out of my purview in terms of the the geopolitical risks between the U.S. and China. But I think that the decoupling is a good thing, even if it moves further south into Asia, whether it's Vietnam, Philippines, or what have you. But again, Mexico is an interesting alternative, especially for goods heading to the United States, and it's a great opportunity for Mexico too. It could really grow a middle class there a lot faster than it has. But obviously, there's the kind of the crime element that needs to be addressed there for, I think, a lot of companies to be fully comfortable with making huge investments in Mexico.
there's risk reward in everything that goes on, and certainly after the pandemic, you when you saw the nearshoring, which is manufacturing closer to the United States, or you've got reshoring where people are manufacturing on within the United States proper, sort of thing. And I think the biggest point you made, Lee, and I think this is very important for you, Freight Nation listeners and watchers, is that we're talking about economies of nations, and they don't move quickly, and they're not designed to move quickly. If they move quickly, you could train wreck everything. You don't want. I don't want. I'm not trying to no aspersion to trains. I'm just saying that is a descriptive. But hey, we love truckers. We're not super against trains. We get our share, but my point though is that these things don't turn quickly, so because they're not designed to, they really can't. And so the idea is just to watch them change. And certainly the manufacturing that's going on in Mexico has increased tremendously, where Mexico is our biggest trading partner now, and the amount of freight that's coming back from Mexico, if you do a lot of cross border stuff, is an opportunity for you if you do that, or if you want to get into that to make more profit for yourself. So these are opportunities that you see. But if you don't know the data in the market, you don't pay attention, you don't get the benefit from that. All right, Lee. All right, so with 19 years in transportation, 2 decades, that means you've gotten to see a lot of things that have changed. In a marketplace that was really kind of old and kind of brittle from a standpoint of how it went about running itself. You've seen a lot of change. So, what are some of the biggest changes that you've seen in your couple of decades, and what impact have they had inside of freight transportation?
I think it's like probably the what technology has done in terms of creating more efficient network, giving people the ability to make better decisions. In your world, in the nation's world, if you will, Freight Nation, that is, Mr. Nation.
I'm going to be known as Mr. Nation from now on. Thank you. You just gave me a great name for myself.
But like the smartphone. So, now an owner operator can make a very really informed decision about whether or not they can take a load. And I think, people that leverage the tools that are just on their phone, they probably can truly improve their ROI. And that, that technology benefits not only the owner operator, CH Robinsons and the JB Hunts and the CSXs and the FedExes of the world. So I think that the technology aspect, and listen, I'm not saying that, AI is here and they're going to drive trucks and, um, they're going to, they're going to make, freight markets more efficient. I think the additive benefits of AI and other technologies that have come out over the last 20 years, call it, have really helped transportation companies be more productive, do more with less, and from my vantage point, be able to return capital to shareholders, whether it's dividends or share buybacks, because I cover the stocks, so that's kind of like what I'm looking at. And then I would also say, there's been portfolio management. And when I say portfolio management, so you have companies like JB Hunt that are diversifying into other businesses, or like Knight Swift that are diversifying to other businesses. And then you have companies that are like, we need to focus on what we're good at. So like an XPO, what they did, and what we heard from UPS, today, they had their earnings call and they announced that they were going to look at strategic alternatives for their brokerage business, Coyote Logistics, which they only bought in 2015.
Big rumor about that. Yeah.
Not a rumor, they said it, so it's going to happen. That strategic review ends up in them selling it or just keeping it and doing something different with it. Who knows? But I think that's been pretty interesting, where you're seeing like some of these carriers either take a U-turn and focus more inward in their core competencies, or looking to diversify. And the ones that are looking to diversify, they're looking to diversify for a lot of reasons. A Knight Swift, for example, they were a really well-run trucking company, a truckload carrier, and they still are. But they decided that they wanted to reduce the cyclicality of their businesses, reduce some of the asset intensive aspects of their business. So they started doing more asset light businesses. They stepped into the LTL world. I guess that was like 2021 or 2022, when they bought two regional carriers. And I think that's pretty interesting kind of development and evolution of not only of a company that was probably one of the best run truckload carriers, and they're making a name for themselves, I think, in the LTL world. I think, when you fast forward 10 years from now, they're going to be considered probably, one of the top national carriers.
Yeah, well, Kevin Knight has always had his MO was always running with efficiency, and he bought Swift and brought them into efficiency. Now they bought US Express. I'm sure they'll bring that into more efficiency. I mean, all you can't say transportation without saying those three company names as far as like things go. So I appreciate your point of view on what's sort of been some of the really impactful changes, which is, and honestly, that's what created the relationship between Bloomberg and Truckstop, which is the data explosion, where it used to be you had to really go find the data. Now the data is aggregated into networks and systems where you can take it and really make something meaningful out of it for a completely another part of the world, another part of a marketplace. So super impactful and meaningful. So you said that you and your friends on looking at the maritime world were over in Singapore and Asia, and made a bunch of stops and did some talks over there. You also got to speak at our association within trucking, the American Trucking Association, the management conference event that they had this year, and so which was really super great to see my friend up there. And so, what was your focus on it? Was called the Rhythms of Change: Navigating the Future of Trucking. For those, I'm sure some of the call weren't there, even though the MCNE event through ATA is a great event. Give a little, if you wouldn't mind, give a couple minutes on your recap on what you spoke on.
I have to remember that.
Come on, I love it.
Oh, by the way, Bloomberg was founded in 1981. Just
There you go. Oh, you
1981.
found it. Fantastic. 81. Hey, the year
Yeah,
after deregulation of the trucking industry.
yeah,
There you
yeah.
go.
Yeah, I think we were just talking about the outlook for trucking in general, and that was back in October, and I think the world is, I think when we were back in October, we thought that the market would right size itself a lot quicker than it has, and then obviously lower diesel prices have really, provided a lifeline for a lot of trucking companies out there, a lot of smaller trucking companies. Because you were mentioning, during the pandemic, a lot of people joined the market, and when they came into the market, the ones that were buying, used equipment or new equipment, obviously a lot of them buying used equipment, they were very high costs. And if you're charging, $5 a mile, then it's fine. But, when you're sub $2 a mile, it doesn't make any economic sense. Not to totally deflect the direct question, but it's what I do. So, I think the more interesting thing now, like what we're trying to take a better look at and better understanding, and you probably have some great data on this, is, we're insurance. Insurance is not only are more carriers saying, I don't want to insure the trucking market. And if there's fewer carriers, that means rates are going to go up, and rates are also going to go up because, the verdicts are getting out of control. And so, I think that, that is going to be unless rates improve soon, you know, people aren't going to be able to, pay their insurance, their new insurance, because A, they may not even be able to find a carrier that'll insure them. And B, if they do, it's going to be significantly more expensive. And you need higher rates. And the problem with the truckload market, or the beauty of the truckload market, depending on how you look at it, especially the spot market, it's so fragmented and so easy to get into. And, obviously people don't want to leave unless they absolutely have to leave the market because they need to make a living. In a perfect world, rates would be steadier, and people would be able to figure out, what their cost base is, so they can really make an educated decision about whether this is a business they want to be in. But when you have rates going from like $5 a mile to $2 a mile, and your cost base is based on $5 a mile, it can get ugly.
Yeah, diesel fuel and insurance and diesel fuel. Those are the two big,
Do you
leading
do you see
expenses.
do you see numbers on, because do you guys provide insurance
We do. With our
on
RMS product, we have the greatest view into the small market insurance coverage through the onboarding and insurance monitoring we do for them. So we see their coverage amounts. I don't know if I could report on what they pay for it, but I do know it's been increasing. I look at the report that I believe Knight Swift just put out. It lowered their earnings, their hit they took on their insurance for this past quarter. I think the last quarter of last year. So insurance is going to continue to be a problem, and the federal government's also going to continue to come at it from a standpoint of it needs to be adjusted. The coverage amounts need to be adjusted because it hasn't been adjusted in quite a long time. So that's another thing, Freight Nation, to pay close attention to, whether you're a broker or whether you're a carrier or whether you're a shipper. All costs matter, because it goes into whether or not you're going to have available capacity, whether you're not going to be able to get goods to market, because we got to have the trucks there in order for that to happen. Well, Lee, I appreciate your time today, man. It's been this 45 minutes went super fast.
That's it?
As it always does. I know, that's it. Just two old friends just catching up, man, in the market. Man, thank you so much for your insight into the marketplace, and thank you for your encouragement for the Freight Nation listeners and watchers to pay attention to the data. Bloomberg's a great resource for that. So just appreciate all you do to help the industry.
Well, thanks for having me, and it's always a pleasure to talk to you, whether it's being recorded or not.
well, I tell you what, it's recorded. We can just put a better side of us forward every single time. Well, Lee, on behalf of Freight Nation, thanks a lot. And Freight Nation, don't forget, man, just don't forget to work hard, be kind, and stay humble. We'll catch you the next time. Thanks for watching and listening. On behalf of the Truckstop team, thanks for listening to this episode of Freight Nation. To find out more about the show, head to truckstop.com/podcast. If you enjoyed this episode, make sure you hit subscribe so you don't miss any future episodes. Until then, keep on trucking and exploring the open roads with Freight Nation, a trucking podcast.